curious about the type of loan you might qualify for, go check out the video ahead. We are going to talk about different loan types and what their qualifications are. Welcome back to my channel, BB Knows. My name is Brandy.Baker and I am a realtor here in Michigan, here to share with you all that I know about real estate and how exciting it is. So if you haven't already or you're new here, just subscribe right below and hit that bell notification so that you know when I'm putting out new and interesting videos about real estate. Let me first say congratulations. If you've made it thus far, then I'm assuming you've been already pre-approved for your home mortgage loan. You, at this point, will probably know what type of loan that you've been pre-approved for, but let me go over the different types of loans just in case you're wondering. So exactly what a mortgage is, it is a device used to create a lien on real estate by contract. And what that means is that you do not have to pay for a home in full upfront. It is placed, there's a lien placed on it by your mortgage so that you have a set amount of time to pay it off. There are two main types of loans, that is the adjustable rate mortgage and the fixed rate mortgage. The fixed rate mortgage is essentially what it sounds like. You are going to get a set interest rate that you will pay over the life of your loan, whether it's a 15-year or 30-year. It could be 15-year fixed rate or 30-year fixed rate mortgage. But the adjustable mortgage is slightly different. Some people go for them because they are going to have the home for a short time and they find that they can get a lower rate to start the loan than they did on the fixed rate. So it works for you to have an adjustable rate if you are going to own the home for a short time. The long term, not always the best, because the adjustable rate mortgage can go a lot higher than that fixed rate. So if you're going to own the home for if it's your forever home, go ahead and get the fixed rate mortgage. It's going to be in your best interest not to have the interest rate fluctuating throughout the life of your loan. In this video, I'm going to cover four main home mortgage loans. We're going to talk about the FHA, the Federal Housing Administration loan, a conventional loan, a USDA loan, which is, yes, United States Department of Agriculture loan, and a Veterans Association loan or VA loan. The first loan I'm going to talk about is the FHA loan. That is, FHA stands for Federal Housing Administration, and that loan is provided to you by an FHA approved lender. Your DTI for this loan, or debt to income ratio, and hey, if you don't know what debt to income ratio is or how to calculate it, check out my other video because we cover all of that. So your DTI for this loan needs to be below a 43%, and your down payment is going to range, or is going to depend on your credit score. If your credit score is between a 500 and a 579, your down payment is only 10%. But if it's a 580 or above, then it's only 3.5% down payment. So shoot for that 580 or above. The FHA loan is technically developed so that lower income families or below average income families could own homes, so that it creates just an easier way for you to put that down payment down with that 3.5% as long as your credit score is above a 580. Also, you can't have any delinquent government loans on your credit history, so keep that in mind when applying for a mortgage, a home mortgage loan. And MIP, your mortgage insurance premium for an FHA loan is going to be 1.75% upfront, and annually it'll be between 0.45 and 1.05%. That upfront cost, your mortgage insurance premium, can be financed into the life of the loan, or into the life of the loan, so it can be financed into the monthly mortgage. Remember, the MIP is the mortgage insurance premium, and it just goes onto your mortgage because you are not putting 20% down. So if you have 20% to put down, go ahead and do that. You'll save some money on that mortgage insurance premium. Next, we're going to talk about the VA loan. So VA stands for Veterans Association. The Veterans Association does not give out that loan, but they do determine who qualifies for it. You need to be an American veteran, a military member, reservist, or select surviving spouse of a veteran to qualify for this loan. There is no hard DTI for the VA loan, so that's great. And there isn't a set requirement for the credit score. That will come from the particular lender who is giving out that loan. The supreme benefit of a VA loan is that there is no down payment on a VA loan. Awesome. And if you sell your VA loan, so if you sell your home and you use that money, your profit or whatever, you use it to pay off the loan, you now regain full entitlement to your rights to go under a VA loan again on your next purchase. If you sell your home to a couple and one or both of them happens to be a veteran, then you also gain full entitlement to use your VA loan on your next home purchase. So some really great benefits for the VA loan. And next we have the conventional loan. So the conventional loan is not backed by the federal government, so there is a little more freedom depending on the lender of the requirements and what needs to be required at the home when it's being purchased if you have a conventional loan. The DTI for conventional loan is also 43%, and you will pay mortgage insurance premium if you do not put down at least 20%, which is fine. You don't have to, but you're going to pay an MIP for a bit. And the down payment on a conventional loan can be as low as 3% and as high as 5%. So somewhere between 3 and 5%. Your credit score is a minimum of 640 with a good credit history in tow. And lastly, we are going to talk about the USDA loan. So this loan is United States Department of Agriculture backed, and it is part of their Rural Development Guaranteed Housing Program. So in order for the property to qualify, the property has to be located in an area that is considered rural, which means it's less than 20,000 people population. And the buyer cannot have an income 15% above the median income of the area. The USDA loan does require a DTI of 41%, so a little bit lower. Nice. Your credit score does have to be a 640 and good credit history in tow. The residence that you are purchasing needs to be your primary residence, so your primary place of living. And your mortgage insurance premium for the USDA is going to be 1% upfront. The annual is 0.35% of the principal each year. When you apply for your loan, your lender is going to give you the best loan possible for you, which is why I say tell your lender everything up front. If you don't have a ton of money saved for a down payment, let them know that. Let them know everything, your credit history. They're going to find out anyway, so let them know, right? Help them help you, okay? Give them all the information you can, because if you're asking, you can always ask to be qualified for a conventional loan or a FHA loan. You can always let them know you're a veteran so that you want to be qualified for that. Or if you know your property is rural and you want to be considered for a USDA mortgage, just give them all of the information up front so that they can best serve you. Like I said, they're going to find out anyway. So there really is no point in trying to not tell them. Give them all the information up front, but your lender is definitely going to be the person that gives you what type of loan you're qualified for and will let you know at that time what your down payment is going to be so that you can be fully prepared when you enter your shopping experience for your home. Thank you so much for checking out the video today. I am sure / hopeful that this information was helpful to you. So if it was, don't forget to subscribe below so that you can get all that I know about real estate. If you have any other questions or comments, please leave them in the comment section below or reach out to me. I am so glad to take all of your emails and comments, and let me know what else you want me to cover about real estate, especially moving into 2021.